Good morning, ladies and gentlemen. This is Butch Shorak, Options University, Friday, September 8th, 28th, 2012. Welcome. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. And we've had quite a week as we've had some interest in the week. Dallas Fed was on Monday. We went through Tuesday, consumer confidence, nothing much happening, very exciting here. Numbers weren't all that great, and then we got to today. Thursday, September 27th, 2012, started with durable goods orders. Durable goods are commodities that basically would last 3 years or more. Down 13.1%. So not exactly good numbers coming in this morning out of durable goods. All right, the next one that came out was GDP. GDP last quarter two, was pulled back from 1.7 to 1.3%. Again, not very good numbers. Then next came jobless claims. Jobless claims came in at 359,000. That's last week's unemployment numbers, and it was the first time in about 6 weeks that we've gotten better numbers than expected out of the jobless claims. On Friday, September 28th, we have personal income and outlays taking place at 8:30, 9:45 Chicago PMI, and finally at 9:55 we got consumer sentiment. What did happen on Thursday was that the indexes recouped some of the lost ground that they've been putting in for the 5 days when they were in a down cycle. Amid possible developments for stronger Europe, Spain focused on talking about some of their budget cuts, expecting a soft recession in 2013, but not talking about as much about spending more money as about spending less money. Speculation came out that China regulators are ready for some kind of stimulus to get their economy up and increasing. And so we had quite a day in the market for announcements, and let's see what kind of an effect that had on the S&P. As we look at the S&P, we are definitely in an uptrend. We are spending our time above this 30-day moving average. Notice what happened is we came down to that 30-day moving average and got a bounce. This was after about 5 days in a row of lower numbers in the S&P after a level of consolidation here. So as you can see, in fact, let's go to a little bigger chart so that it's easier to see. We see that what has happened on Thursday is we ended up with a higher high, a higher low, and a bounce off of somewhere near that 30-day moving average after a level of consolidation after the Fed meeting, which was that big candlestick. And we see that we finally got that little bit of a pullback that we were expecting and talked about when we last talked on Monday morning. And we got that pullback and pulled down to that 30-day moving average, and now we see that we've had a bounce out of the SPX. Next, let's take a look at the Dow, see if it followed, and we see that we did. We ended up with a bounce today out of the Dow, as the Dow starts heading back up again, going back into that upcycle in an uptrending index. Next, let's take a look at the NASDAQ, see if it followed the suit of the other two indexes, and we see yes, it did. Had a little deeper pullback, went actually below that 30-day moving average, and now that we've had a pop up, we see we have a higher high, higher low, and have reversed our cycle. So while it's in an uptrend, no question about that, we see we are now in an up cycle also, as we had 5 days down and now we are headed back up. Now let's take a look at the Russell 2000 and see if that over-accentuated more even than the NASDAQ showed us. And we see that, only came down to the 30-day moving average. Nice and pure, clean, got there. And on Thursday we saw that we reversed in that upward direction again. Again, an upcycle, an uptrend rather, with a upcycle now beginning as we got a higher high and higher low for the day of Thursday. Looking at the VIX, look at that thing pull right back as the fear leaves the market when we start going up, and we're headed back down to that area right around there at 13.5, which has been kind of an area that we've been bouncing around since basically the middle of August, with very little fear in the market, and as you well noticed, a decrease in the amount of volatility, and also a decrease in the amount of premium on our options. Next, let's take a look at the bonds, and we see that the bonds we're in an uptrend, and now you see that we are pulling back a little bit, and as the market goes up, we can expect that the bonds may pull back further, heading down to a lower level. We looked at TLT. TLT is our ETF that we look at for bonds. Next, what we're going to take a look at is XLF. XLF is one of the things we look at for our financials. And we see that that particular sector came down with the overall market, quite a downtrend, basically a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days down, and now we are going back into that upcycle with higher highs, higher lows, but not a whole lot of volume today as we went to the upside, a rather low volume day. Not exactly the best thing we like to see. When we see it headed back up, we like to see it do it with volume to show commitment. Looking next at oil, we see that oil has been pulling back. It bounced a little bit with the overall market today, but we were well below that $100 a barrel area. This was USO, our ETF for oil, and we see that we've had a nice little pullback in that, well below the 30-day moving average. Next, let's take a look at the gold, and we see that gold headed back up. We've been consolidating, and we see that we're kind of trading in this range right in here. And so let's see if we head to new highs with gold, as there is that flight to safety that can take place with gold, as there is worry within the market. All is not quiet on the Asian front. All is not quiet on the European front, and we are very news oriented in today's current market and have been for quite some time. Entering into October, beginning of a new earnings season, entering in October, the beginning of a new time in the market. We'll see how October does. Usually a strong quarter, the fourth quarter of the year. Two strongest quarters being the fourth quarter and the first quarter. And we're going into an election, provides all kinds of variables for us to look at in the market. Looking at the spider, we see that after a consolidation area, we pulled back to that 30-day moving average, had a higher high, higher low today, but on lower volume. Now, one of the contradictions we have to the pop-up day that we got out of the market, we just as soon see the up days or the bullish days to show strength and show big volume. So we'll see how far we're going to go back up. Current target right up there around 147. We'll see if it actually goes up that high. So for those of you that are gold members, stick around and we'll look at our stocks to watch. Excuse me. I've had this laryngitis for about the last week, and it is getting better. I hope it's over soon. For those of you who want more free videos, go to www.optionsuniversity.com/free gold, as that's market recap for the fourth week, week after expiration, the last week in September. And this is Butch Chorak, Options University. It's Friday, September 27th, 2012, and thanks for being here.